Hello everyone and welcome back to the sixth session of chapter 10 Government Budget and the Economy. Today we are going to deal about numericals in this session. Theory portion we have finished. So let's start with the numerical session. Before starting the numericals, you need to be clear with the formulas. So let's first of all discuss about the formulas. Number 1, that is revenue deficit. Now, revenue deficit is the difference between revenue expenditure and revenue receipts. Both the revenue expenditure and revenue receipt do not affect the assets and liabilities of the government. So the first formula is revenue deficit is equal to revenue expenditure minus revenue receipts. Second, fiscal deficit. The formula to find fiscal deficit is total expenditure minus total receipts excluding borrowing. This thing is very important. When we consider total receipts, we exclude borrowings from that. Now, if inputs are not, then you need to find the sum of revenue expenditure and capital expenditure. Similarly, if total receipts are not given in the question, then you need to add revenue receipts and capital receipts, but capital receipts excluding borrowing. When we consider capital receipt, we have to exclude borrowings from that. Now let's understand this term in detail. Capital receipts excluding borrowings means what? As discussed in earlier session, capital receipts includes three things, that is borrowings, recovery of loans and other receipts. But when I talk about capital receipts excluding borrowings, I have to consider only two things, that is recovery of loans and other receipts. So if someone asks what are the things included in capital receipts, you need to consider three things: borrowings, recovery of loans and other receipts. But while calculating the numerical, we are using only these two things because here we need to have capital receipts excluding borrowing. So we have to exclude borrowings and we have to consider only two things: recovery of loans and other receipts. These two things are also termed as non-debt creating capital receipts, because no debt is created. When we recover the loan that we have given earlier to someone, no debt is created. When disinvestment is done, no debt is created. So these two terms together known as non-debt creating capital receipts. Now the third formula. Primary deficit is equal to fiscal deficit minus interest payment. But which interest payment? Interest payment on previous year's borrowing. So we have seen formulas of revenue deficit, that is revenue expenditure minus revenue receipts. Second, fiscal deficit, which is equal to total expenditure minus total receipt excluding borrowings. One more thing, fiscal deficits are also known as borrowings of the government, net borrowings of the government, that is fiscal deficit. Last, number 3, primary deficit, which is equal to fiscal deficit minus interest payment on the previous year's borrowing. Now let's start with the numerical. This is the question. What you need to calculate here is revenue deficit and fiscal deficit. The question is given. Let's have a look. Tax revenue, non-tax revenue, borrowings by government, disinvestment, revenue expenditure and capital expenditure. You need to calculate here revenue deficit and fiscal deficit. Let's start with the revenue deficit. The formula is revenue deficit is equal to revenue expenditure minus revenue receipts. Here you need to consider the things which do not affect the assets and liabilities of the government. Revenue expenditure, which is given in the question directly, that is 1500 billion, minus revenue receipt. Revenue receipts are not given in the question, but you need to take those receipts which do not affect the assets and liabilities. So here tax revenue and non-tax revenue are those receipts which do not affect the assets and liabilities. So these two together will be revenue receipts. So the total is 1000 plus 150. So 1500 minus 1150. The answer is 350 billion. The next is fiscal deficit. The formula to find fiscal deficit is total expenditure minus total receipts excluding borrowing. Now total expenditure and total receipts are not given in the question directly. So how to find total expenditure as discussed earlier? It is the summation of revenue expenditure plus capital expenditure. And how to find total receipts? It is the summation of revenue receipts plus capital receipts but excluding borrowings. When we find capital receipts, we will exclude borrowings from that. Revenue expenditure is given in the question 1500 and capital expenditure is also given in the question, that is 480. 1500 plus 480, that is total expenditure, minus revenue receipts. These two are revenue receipts which, because it do not affect the assets and liabilities of the government, it comes to 1150 plus capital receipts. These two are capital receipts, but we need to consider only capital receipts excluding borrowings. So we will not consider this capital receipts borrowing because we have to exclude the borrowings. So we will only consider disinvestment here. So capital receipt is borrowings and disinvestment here, but we have to consider here capital receipt excluding borrowings, so it is only 50. So it is 1150 plus 50. The total is 1980 minus 1200. It is 780 billion. So fiscal deficit is 780. Now, as discussed earlier, you can directly find the answer of fiscal deficit. How? Fiscal deficits are the borrowings of the government, also known as the borrowings of the government. You can see in the question, borrowings are directly given in the question. So if you don't find all these things and instead if you write fiscal deficit is equal to borrowings of the government, which is 780 billion, then also the answer is correct. No need to go for all these things. Is it clear? You can directly write fiscal deficit because what is fiscal deficit? It is borrowings of the government which is given in the question directly. That is 780. But sometimes in the question this thing is not given. So you have to go by this method. Now the next question. Here in this question you have to find only fiscal deficit. Let's go with the question first of all, everyone. The things which are given: capital receipts 68, revenue expenditure 160, interest payment is 20, borrowings 32, tax revenue 50 and non-tax revenue 10. Tax revenue and non-tax revenue, they do not affect the assets and liabilities of the government when we talk about receipts. Now let's start with the formula, everyone. Fiscal deficit. Fiscal deficit is equal to total expenditure and minus total receipts excluding borrowings. But as total receipts and total expenditures are not given, total expenditure is equal to revenue expenditure plus capital expenditure. Revenue expenditure is given in the question, that is 160. Capital expenditure is not given in the question. No capital expenditure. Minus revenue receipts, that is the summation of 50 and 60. Both these receipts of the government do not affect the assets and liabilities. So revenue receipt is 60. Now capital receipt excluding borrowing. Capital receipt, this is capital receipt, but we don't want capital receipt here. We want capital receipt excluding borrowings. So 68 minus 32, it is 36. But still we cannot find the answer here because fiscal deficit is not given here and capital expenditures are also not given here. So we actually should not go for this thing. We can get the answer directly. As discussed earlier again, what is fiscal deficit? It is the borrowings of the government. So if in the questions borrowings are given, that is your final answer. So what is fiscal deficit in this case? It is 32 billion. You can find the answer directly instead of going with this whole process. You cannot find answer by this method because capital expenditure is not given. Directly you can write fiscal deficit is the borrowings of the government, which is equal to 32 billion. Hello and welcome back to the 7th session of chapter 10, that is government budget and the economy from the macroeconomics. In our last session we have discussed about the numericals relating to the government budget. Today also we are going to discuss about few numericals. In yesterday's lecture we have seen the basic formulas relating to the chapter. Let's revise it quickly, the three formulas. Number 1, revenue deficit is equal to revenue expenditure minus revenue receipts. Revenue expenditure and revenue receipts, these do not affect the assets and liabilities of the government. The second formula is about fiscal deficit. Fiscal deficit is equal to total expenditure minus total receipts excluding borrowings. If in the question total expenditure is not given directly, then you have to add revenue expenditure and capital expenditure. Similarly for total receipt, if total receipt is not given, you have to add revenue receipts and the capital receipts. Revenue receipts plus capital receipts. Capital receipts excluding borrowings. Now the third formula is about primary deficit. Primary deficit is equal to fiscal deficit minus interest payment. Interest payment on the previous year's borrowing. So these are the three formulas: revenue deficit, fiscal deficit and primary deficit. Fiscal deficit is also known as borrowings of the government, net borrowings of the government, net borrowings of the government. So let's start with our first numerical. Let's have a look at the question. You have to find here revenue deficit, fiscal deficit and primary deficit. The question here is tax revenue, capital receipt, non-tax revenue, borrowings, revenue expenditure and interest payments. Let's start with the first one. It is revenue deficit. The formula to find revenue deficit is revenue expenditure minus revenue receipts. Revenue expenditure is given in the question, that is 80, minus revenue receipts are not given in the question. So we have to consider those receipts which do not affect the assets and liabilities of the government. So these three are the receipts of the government. Borrowings is also receipt of the government, but we need to consider only those receipts which do not affect the assets and liabilities. So that is tax revenue and non-tax revenue, that is 47 plus 10, that is 57. Both the tax revenue and the non-tax revenue do not affect the assets and liabilities of the government. So revenue deficit comes to 23 rupees in Arab. Secondly, we have to find fiscal deficit. If in the question borrowings is given, you need to write down fiscal deficit is equal to borrowings of the government, that is 32 given in the question. So fiscal deficit you can find out directly from the question, that is 32 Fiscal deficit is rupees 32 crore. Last is primary deficit. Primary deficit is equal to fiscal deficit minus interest payment. Fiscal deficit is 32 minus interest payment is given in the question 20. The answer is 12 crore. That is fiscal deficit. Question number 2. Here also we are supposed to find revenue deficit, fiscal deficit and primary deficit. Now let's have a look at the question once. Capital receipt net of borrowings. What does it means? It means capital receipt 95 which is given here, it is excluding of borrowings. So borrowings are not here. The capital receipt is here excluding of borrowings, which is 95. Next is revenue expenditure, interest payment, revenue receipts, capital receipts. Let's start with the first one, revenue deficit. The formula to find revenue deficit is revenue expenditure minus revenue receipts. Both are given in the question. Revenue expenditure is 100, revenue receipt is given 80. So answer is 20 crore. This is revenue deficit. Next is fiscal deficit. If in the question borrowings is given, then we would have written fiscal deficit is equal to borrowing and whatsoever amount is given in the question. But fiscal deficit, in order to find here, you need to go with this formula: total expenditure minus total receipts excluding borrowings. Now total expenditure here means revenue expenditure and capital expenditure. Total receipt excluding borrowing means revenue receipts plus capital receipts excluding borrowings. Revenue expenditure we have in the question, that is 100. Capital expenditure is 110. Revenue receipts are given in the question, that is 80. And capital receipt excluding borrowing, which is given in the question, capital receipts net of borrowing, that is excluding borrowing, that is 95. So let's solve it. 100 and 110, it is 210 minus 175. The answer is 35 crore. Now the last, primary deficit. The formula to find primary deficit is fiscal deficit minus interest payment. Fiscal deficit we have in our previous topic, that is 35 minus interest payment given in the question, that is 10. So primary deficit is rupees 25 crore. Now the next question. In this question we have to find two things, fiscal deficit and primary deficit. Let's have a look at the question. Revenue expenditure 70,000, borrowings 15,000, revenue receipts 50,000, and interest payment is 25% of revenue deficit. So interest payment is not given here. As we have to find primary deficit, we need interest payment. So let's first of all find out the interest payment. What is interest payment in the question? It's 25% of revenue deficit. So first of all we have to find the revenue deficit. Now the formula to find revenue deficit is revenue expenditure minus revenue receipts. Revenue expenditure is given in the question, that is 70,000. Revenue receipts are 50,000 and revenue deficit is 20,000. rupees in crores. Now interest payment is equal to 25% of revenue deficit. It means 25% of 20,000. It comes to 5,000. So we got interest payment here. That is interest payment 5,000. Now let's find out first the fiscal deficit. Fiscal deficit. You can find fiscal deficit directly from the question, because fiscal deficit is the borrowings of the government, which is given 15,000. So fiscal deficit is 15,000 crores, directly given in the question. Now the primary deficit, which is equal to fiscal deficit minus interest payment. Fiscal deficit is 15,000. Interest payment we got here, that is 5,000. So primary deficit comes to 10,000 crores. Next question. In this we have to find revenue deficit, fiscal deficit, primary deficit, and non-debt creating capital receipt. Let's have a look at the question. Revenue expenditure, revenue receipts, total receipts excluding borrowings, capital expenditure, interest payment. Again, in this question, interest payment is not given. It is indirectly given, that is 50% of revenue deficit. So first of all we will find revenue deficit, and 50% of the revenue deficit will be interest payment. So let's first of all find out revenue deficit. Revenue deficit. Now the formula to find revenue deficit is revenue expenditure minus revenue receipts. Revenue expenditure given in the question, that is 40,000. Revenue receipt, that is 30,000. So revenue deficit is 10,000 here. Now let's find interest payment. Interest payment is 50% of revenue deficit, that is 50% of 10,000. That comes to 5,000 rupees in crores. Rupees in crores. Now we have to find fiscal deficit. The formula to find fiscal deficit is total expenditure minus total receipts excluding borrowings. Total expenditure is not given in the question directly, so we have to add here revenue expenditure and capital expenditure. Revenue expenditure and capital expenditure. Revenue expenditure is 40,000, capital expenditure is 70,000. So 40,000 plus 70,000 is 1,10,000 minus total receipt excluding borrowing is given in the question directly, that is 50,000. So the answer is 60,000 crores. Now primary deficit. The formula to find primary deficit is fiscal deficit minus interest payment. Fiscal deficit is 60,000. Interest payment we have here, that is 5,000. The answer is 55,000 crores. This is primary deficit. Now one more thing we need to find here is non-debt creating capital receipt. Let's understand that topic. What we need to find here is non-debt creating capital receipt. What does it mean? First of all, it is It is also termed as capital receipt excluding borrowings. So if we have capital receipt, we exclude borrowing from that, we can get non-debt creating capital receipt. But here in the question, capital receipt excluding borrowing is not given, but total receipt excluding borrowing is given. So if we deduct revenue receipt from total receipt, we can get capital receipt excluding borrowings. So the formula to find here is total receipts excluding borrowings minus revenue receipts. Total receipt excluding borrowing is given in the question, that is 50,000, minus revenue receipts are 30,000. So the answer is 20,000 crores. Thank you.